Good morning, everyone. I'm David Paul, the Managing Director of VectorVest in the UK. The market hasn't been in the best shape for the last few days, but I think that there's some opportunity around. So let me move at pace and have a look at UK market direction. This is the VectorVest Composite, which is an equally weighted index of 2,200 shares that we follow on the UK market. It's the broadest measure of the UK market that I personally know of. As you can see, over the last year, the market's been making a series of falling tops. And from November, from the low point, we seem to have charted the first rising bottom in quite a long time. The little green and red triangles represent the longest measure of the trend on VectorVest, which we refer to as a confirmed call. And the longest term measure of the trend on VectorVest has been up since November the 5th last year, and it's still up. As you can see, over the last week, 10 days, markets have come off, but they've just come off to the last old high. So at the moment, the short-term trend on VectorVest UK is down. The underlying trend is still up. So we're advising caution in buying stocks until the short-term trend turns its nose back up in sync with the longer-term trend. So you need a good reason to buy into stocks at the moment, and our basic advice is that you should sit on hands until the short-term trend rejoins the longer-term trend. Let's have a look at some potential swing trades should that short-term trend move up. And first one I'm looking at, I have a position in it already called BP. Everybody's heard of them, I'm sure. This is my standard layout. This is a weekly chart over the last 3 years. I think that the price actions and candles, the green thick line just above the price action is the VectorVest valuation. And you can see that we believe that BP is significantly undervalued at the moment. The blue line in the window below the price is forecast earnings per share. And you can see that that earnings per share, certainly over the last 2 years, since the oil bottom in November 2020, has been rising and rising quite strongly. And that's the engine that's driven this price upwards. Recently, the share price, the market action, charted an ascending triangle, and I have a position since the breakout of that ascending triangle. At the moment, markets are going sideways. There's been 3 weeks of moving sideways, and VectorVest has the share on a buy recommendation. I think if the share should break up through the last hold high of what, 3-4 weeks ago, then there's a swing trade long in that. And I have a position in the stock, and I shall add to that position if that happens. So 2 things to happen. Short-term trend of the London market should turn up. I want to see the stock breaking through that high of what, 3-4 weeks ago. The second stock that looks really interesting is this defense stock, MSIL. Now, the caveat here is that the darn thing is very illiquid. It's pushed up very strongly, again, pushed up as earnings per share was marked up and marked up a lot. It really flew, and now it's consolidated in this, what technicians would refer to as a bull flag. Moved on to a hold recommendation on VectorVest. Again, if it should break the top trend line, defining the bull flag, and the general market should turn to up, then I think there's a high probability that's going to move much higher. The blue vertical line would be the target, and that's quite a target, folks. That's, it's a £4 target in that defense stock. Again, the green line on VectorVest shows that the stock is significantly undervalued. Bit early to do anything unless you're a support and resistance trader, and certainly the stock's sitting right at support at the moment. If you want a little bit of confirmation, then I suggest that you wait. I haven't got a position in this stock. I'm going to wait until at least the general market turns up, where the short-term trend of the overall market moves and joins the longer term trend. It is my belief, therefore it's true for me, that 70% of the exercise is the overall market. And if the overall market is moving up, I get very lucky indeed. When the overall market is not moving up, then I struggle a bit. So go and sink with the overall market, swim with the tide. Now this is Games Workshop. And Games Workshop, I have a position. It pulled off a very important fib ACHI level. That's 78% retracement, which I've clearly marked on the chart. After a period of very, very strong growth, as you can see, earnings per share has flattened a little bit. Nevertheless, the stock has moved off that low and has been charting an ascending triangle now. And I've featured Games Workshop on Core Finance videos, I think the last couple of times. It still hasn't broken, folks, but it still looks good. I have a position in the stock which I added to once, and if it breaks that ascending triangle, I should add to the darn thing again. When I'm right, I want to be huge, and when I'm wrong, I want to be small. So adding to winning positions is a secret of getting rich quickly. Let the positions run, and when they move your way, add to them. Most people do it completely the other way around. They in fact start to actually take profits in winning positions. This is 4. I have a position in 4. Again, you can see that bull flag that I've drawn in about 6 months ago. That was the basis of getting into that position. It's pulled back, gone sideways in a very, very weak tape, I think you would agree. Earnings per share is rising, but I see that my stochastic, if you're a technical analyst, is back in the oversold position, and the share had a very, very good day yesterday. It's on a hold. Again, the general market not looking great, but I think that when the general market rights itself, we'll see 4 moving much, much, much higher. The fundamental metrics on VectorVest are excellent. So I have a position in that, and I will add to that position. I will add to that position when the general market rights itself. And finally, this is the Ugrip. Now, Ugrip for me is one of the ones that got away. I should have bought it last December, but didn't. I unfortunately had a spell of ill health, so I wasn't in the best of form. So I missed that. Share price is rising on rising volume, pulling back on falling volume. It then goes into this little triangle over the last, 6 weeks or so. In the triangle, volume dries up completely, and the volatility of the candles dries up significantly. Some people call that a volatility contraction pattern. It would seem to have broken out of that little triangle on good volume, folks. And that's the only thing that I've done in the last few days, is that I bought into the Ugrip. All of these positions that I've talked about today, I would class them as swing trades. If the general market does turn, then I think there's some fairly quick money in these shares. Now, it's far from certain as to whether the general market is going to turn, and clearly, if you've been reading in the financial media, nobody can quite make sure that nobody is sure whether this rally that we've had since last November is a rally in a bear market, or whether it's the start of a new bull market. So we have to proceed very, very carefully indeed, and I suggest that you do the same. I'll be doing a full review of markets for VectorVest customers on Monday afternoon. Anybody that wants a complimentary to that, if they just email me at david.paul@vectorvest.com, I'll send you off a complimentary invite. And next Friday we'll be at the Traders Show in Hammersmith. That's at the Novotel hotel in Hammersmith. Again, there is a charge to get into that, but if you email me, david.paul@vectorvest.com, I'm sure we can get you a free ticket in. Thanks very much indeed. Bye-bye.